good news you can use for your life. If you want to get the info that'll help you throughout your life. Yeah.
Important.
Who makes a good candidate for a reverse mortgage? I mean, can anybody do it, or would you recommend that there be some things in place for these particular individuals?
So my take, there's a couple criteria, and for the government product, the minimum age is 62. Right now, there are some proprietary, privately lended ones that will go lower than that. And this is a growing marketplace of these equity release programs, all kinds of things that are out there. Some of them are loans, some of them are equity types. So you could do a lot of research on this. But again, the most common is the government insured one. That's minimum age of 62. So that's kind of your first hurdle. From a loan to value, how much do you owe on your home? The FHA is only going to lend enough. They're going to assume you're never going to make a payment, right? And so they're only going to lend so much that if you never make a payment, they don't want this thing to go upside down, right? The last thing they want is to have to pay some deficiency because you owe more than your home is worth. And so they're careful about that. And so when you look at really I usually, for kind of rule of thumb ballpark, is about a 50% equity position, right? So a loan to value. So if your home is worth $400,000, if you owe 200 or less, then this becomes a very viable solution. You can go a little more, a little less, depending on your age and depending on interest rates. So the older you are, the more they will lend. So as you get older, you can actually owe a little bit more. And the lower interest rates are, the more they will lend. So timing gets interesting on this if you think about where we are today. So a higher home value, obviously you can borrow more if your home's worth more. That's kind of obvious. It's the collateral on the loan, right? And lower interest rate. You can't control age, right? I haven't figured that out. I don't think you can, but you can try. Mentally, I guess you could have some. You could, but not really. So you can't control your birthday, I should say. But so you've got home value and interest rates is really your two variables. So what you really want to maximize or optimize this loan is high home values, low interest rates. And if you look at where we are today, we're sort of in this, is real estate likely to go up, down, or stay flat? And most would argue, well, I don't see us going up a ton, maybe eventually, but right now we're in this kind of weird spot where I think we're maybe flat, could soften a little bit if interest rates go up. And then same thing on interest rates. Are we likely to stay flat, go down, or up? Most people would say, based on what we're seeing economically, probably flat, maybe up. Now, granted, we've been saying that for 5 years, but it feels like we're getting closer to a rising interest rate. So arguably, low interest rate, high home values, we're in really an opportune time to start looking at these. So 62, 50% or better equity position. And my opinion, it ought to be something you look at, whether you're speaking to a financial professional, if you have an advisor. Unfortunately, most of them don't understand how these work. So, that's the hard part, is that we educate them every day, all day. That's a large part of my role, is partnering with financial professionals. So if you have an advisor that, needs help, we can help them understand how it works, the math and economics of it. Then we just got to get over the psychology.
That was a question.
For your life.